Welcome to Price Plan Profit. I'm Melissa, and in this video, I'm walking you through exactly how I prepare my charts and my mind before the bell rings. This is where real edge is built before the market even opens. Why does prep matter? Most traders underestimate how critical the pre-market session is. This is where you set your edge, not during the chaos of the open. The moves that happen overnight and early morning reveal key intentions of institutional traders. If you're not reading those signals, you're playing catch up all day. Pre-market prep gives me clarity, direction, and a roadmap. It helps me avoid FOMO, skip low quality setups, and only focus on high probability opportunities. The best part, it builds conviction, and conviction is what keeps you in the trade when things get uncomfortable. If you want to stop guessing and start executing with purpose, pre market prep is where it begins. I always start by reading the overall market. The ES and NQ overnight action sets the tone. Then I confirm trend using the 4-hour and 2-hour charts as well as looking for the inside candle formations. How do I identify key zones? Once I understand the overall market bias, I zoom into the chart and identify my battlefield, key supply and demand zones. These zones aren't just lines, they're where decisions were made by big players. Did price reject hard? Was there a breakout that never retested? Did we leave a gap behind? All of that tells me where price might stall, reverse, or accelerate next. I mark these levels with precision because they become my playbook. If price comes back to one of these zones, I already know what I'm looking for: a bounce, a break, or a trap. No guessing, just reacting with intent. But chart prep is only half the battle. The other half is mental. Before the bell rings, I take a few quiet minutes to visualize 2 or 3 possible price scenarios. For example, what if we gap up and immediately reject a key supply zone? Or what if we break down and trap shorts just above a demand level? I run these plays in my head like a quarterback studying film before game day. How will I respond if the first trade fails? Am I prepared to sit on my hands if nothing lines up? Can I stay patient if the setup doesn't come until 10:30? This step is crucial because emotional triggers will hijack your edge if you're not mentally primed. By planning in advance, I turn uncertainty into preparation and preparation into confidence. When the bell rings, I'm not reacting, I'm executing. Now let's look at a live chart setup in gold and we'll walk you through the whole process. So I always start out by looking at the ES and NQ first to establish what the current trend is. Looking at a daily chart first, I can see that we are making higher lows and higher highs. That means on the daily chart, we're in a bullish trend. Then I go down to a 4-hour chart just to verify that we are still in that bullish trend by making higher lows as well as making higher highs. So on a 4-hour chart, we are also in a bullish trend. I then like to go down to a 2-hour chart to make sure that that bullish trend is still intact. Higher lows, higher highs. So in all of those time frames, we are in a bullish trend on the S&P 500. Then I repeat the process with the NASDAQ chart. First, looking at a daily chart, I can see that we are making higher lows as well as higher highs. So the NASDAQ is also in a bullish trend on the daily chart. I go down to a 4-hour chart and look at price action, higher lows, higher highs. On a 4-hour chart, it is also in a bullish trend. Then lastly, I go to the 2-hour chart looking for higher lows as well as higher highs. And so on the 2-hour chart, we are also in a bullish trend, meaning my bias is bullish. Now I want to take you to gold. Starting first on a 4-hour chart or a daily chart, I can see that gold is making higher lows. And as far as higher highs go, I can see that right up here near 318, that is a place that price has rejected really 1, 2, and 3 times on this daily chart. So 318 is a wall that bulls are not able to push through. Next, I'm going to go to the 4-hour chart and zoom in here, and I can see that on the 4-hour, we are also in a bullish trend. Next, taking it down to a 2-hour chart, where I will build my trade plan for a day trade, both to the upside and downside. On this 2-hour chart, I notice right away that where we did have a low and a nice imbalance candle, gold has currently broken down below this level. So on this smaller time frame chart, the 2-hour, I can see that we are potentially reversing to the downside after making that high at 318. So, where do I have a supply zone? That's going to be at 314.71 by 318. So, for a day trade, I am looking at that as my ultimate target to the upside. Now, I also want to identify where I have demand on this chart, and I will use the inside and up candle formation to find that demand zone, because if price were to come back to this zone, it would be an entry for the upside for me. Now, after I have established both my supply zone as well as my demand zone, I want to play a couple of scenarios over in my head of where price could possibly reject and head back to the downside, or where price could possibly bounce and head back to the upside. I can see here, obviously, in my demand zone, I would be looking for price to be supported and buyers to show up here. So this is a buy zone for me. If I look up above price, I can see that we had this long period of consolidation right here, and price rejected there, and now we are headed to the downside, meaning if I take a trade to the upside, this area represents immediate resistance. Also, if I take a trade to the upside, take profits if price rallies into this area of resistance. And I notice that price is then turning back to the downside. This would be a good area for me to potentially go short because price wasn't able to make it to my supply zone. Now, I also like to use Fibonacci's so that I can include these levels as scale out levels. So I'm going to first measure this current uptrend, and I'm going to remove any of the Fibonacci levels that are above price because I am using them as levels to trim at on downside plays. So my first trim is here at this 309.09 level, and then my target is 306.85 by 303.59. So that is giving me both a scale out level and a final target for a downside trade. Now, Vice versa, to if I take a trade to the upside, I like to have scale out levels as well. And the way that I find those is by measuring this downtrend using Fibonacci retracement tool, and I mark from the high to the low. And now I have areas to scale out if I take a bullish trade to the upside. That way, I would be protecting my profits by moving my stop to break even as my scale out targets are hit. All right. Notice that this area that I've already played out in my mind as a possible rejection area falls perfectly between these two Fibonacci levels. So if I were to take a trade to the upside, after the bell, I know immediately that at 3:11:38 that is a place for me to take some profits, moving my stop to break even and protecting my capital, because there is a great possibility that price could reject at this previous consolidation area and followed by a breakdown. All right. And if I am short from this level and I have taken profits, then when price makes it to my target, I can reverse the trade here, get out of my puts, and buy calls to potentially trade this to the upside. Now, in the event we make it past this area of consolidation, and up to my supply zone target, this is also an area that with confirmation that price is turning down, I can go short or buy puts at this zone as well. So I played out the possible scenarios. I know where I would want to scale out, protecting my capital as I am in a trade, whether it be to the upside or the downside. And so at the bell, I will be ready to execute once I know where my PMZ or pre-market zone is setting up. If price is above it, I'm looking to go long and trimming at the levels on my chart on the way to target. And if price is below it, I'm looking to go short and trimming at the levels on my chart on the way to target. So to recap, let's look at my checklist for success. This isn't just a checklist, it's a routine that builds consistency and removes emotion from the open. First, I check the overnight trend in ES and NQ. That gives me context. Are we gapping up into strength or down into fear? And what is the current market trend? Then I mark my supply and demand zones. These are the price levels that matter, the ones that tell me where smart money is likely to step in or step out. They give me targets both to the upside or the downside. I follow that with looking where the pre-market zone is anticipated to print. It's my compass. If price is above it, I'm leaning long. If we're below, I'm looking short. It simplifies the chaos. Next, I create my scale out levels using Fibonacci and trendy edges. And finally, I visualize scenarios before they happen so nothing surprises me. Whether it's a breakout, a fake out, or a chop fest, I already have a plan. This checklist doesn't guarantee I'll win every trade, but it guarantees I'll enter the market with clarity and purpose. That's the difference between chasing and leading. And in trading, leaders last longer. If this video helps simplify your pre-market process, do me a favor, hit the like button so YouTube knows this content matters. Subscribe if you want real strategies and not hype. Every week I drop new videos to help you become a more consistent and confident trader. Got a pre-market routine of your own? Drop it in the comments. I read every one and I'm always looking to learn from other sharp traders. And if you're tired of trading alone and want to see how I prep and trade in real time, click the link in the description to join me live in the Trendy Trading Room at Simpler Trading. I'll see you in the next video.